Alright, so welcome to this October 2017 trade review. So in this video, I'm going to be reviewing the trades I've done in the month of October, as well as the trade alerts I've given out, and let's run through what we can learn from the month of October. So alright, so in my last trade review, which was September, we had two trades that were open, which was STLD and IRDM. So as of now, both trades have closed at 2.38R and 4.5R for IRDM. So to conclude, the month of September, we closed with 18R out of 10 trades, and the expectancy per trade was 1.83. So we had 9 wins, 1 loss, and no break even. So the win rate for September was 90%. So you can see the result here. It was 1, 2, 3, 4, 5, 6, 7, 8, 9 wins and 1 loss. 18R. So for those of you who are not familiar with the R concept, R represents your risk per trade. So for example, I'm risking 2% risk per trade of my capital. Alright, so an 18R result basically means 18 times 2, so it's about 36% return for the month of September, which was a pretty good month, getting 36% return for the month of September. Now, how about October? October was not as positive. In fact, in October, you can see over here, let me just scroll down October, just closed most of the trades. I've got one more trade open. Give me a second. Yeah, so one more trade open, which is INVA. So that's still open. We've got 14 trades closed. As you can see, for the month of October, we ended up with minus 2.29R out of 15 trades. 4 wins, 7 losses, and 3 break-evens, with a win rate of only 36% compared to 90% in September. So here are the results over here. There's a win, a loss, a win, break-even, loss, 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 win, break-even, loss, loss, right? So I had subscribers who sent me an email and said, "No, Adam, what happened? Right? What happened in September? It was fantastic. I made so much money, 30% return for the month, 90% win rate, and in October, what went wrong? What happened, right?" And my answer to you is that nothing went wrong. That's trading, okay? And that's the reason why many people fail at trading, because they've got an unrealistic expectation that, every month I'm going to get a 90% win rate. Every month I'm going to get 40% return. I'm going to be a millionaire by next year. Doesn't happen that way. The realistic thing about trading is that your win rate on average should be about 50 to 60% win rate on average. Now, it doesn't mean that every month you get 50 to 60% returns. All right? It's like, for example, you toss a coin, your win rate for heads statistically is 50%. But you got to toss the coin about 50 to 100 times to get roughly 50 heads and 50 tails in a large sample size. Now, if you toss the coin 10 times or 20 times, you will not get 5 hits and 5 tails. In fact, you can get 5 tails in a row or 5 hits in a row. Okay? So the small sample of trades, the outcome is random. In other words, there's a bit of luck involved. And you can see that in September, I was lucky because in September, within those 10 trades I took, it was 90% winners, right? But in October, it was only 36% winners. But if you average everything out, again, it's about 50-50, right? So you got to think in a large sample and not a small sample size. And we'll go into that later. So later on, I'll go into each and every trade and why I took the trade, and the result I got, shifted my stop loss, exit at a loss or a profit. Okay, so that's the result over here. Now, another thing some people were concerned about, they said, Adam, normally you said when you lose 1R or you risk 2%. So the worst that can happen is you lose 1R. And you're winning 2R. So my risk to return ratio is 1:2. So that's what makes your trading system profitable over time. As long as you win more than you lose, even with a 50% win rate, you're very profitable, right? But there was one trade, as you can see, MGLM, on the 12th of October. What happened? Okay, instead of losing my normal 1R, I lost 3.3R. Okay, so what happened? Basically, the price went down too fast below my stop loss. So sometimes you can get stopped out. You can sell, below your intended sell price. That's when the price gaps down or moves down too fast. You end up losing 3R instead of 1R. And some people freak out and they say, Adam, it's possible to lose more than what I want. Yeah. So remember, in the short term, yes, sometimes you can lose more than 1 hour. It's called bad luck, right? That happens, right? When the stock gaps down, and we tend to avoid that. We can avoid that by avoiding stocks that are going to announce earnings. We never enter a stock when it's going to announce earnings. Now, MGLN did not announce earnings, but for whatever happened, I don't know what happened, the price gapped down really fast and I lost minus 3R. So in one trade, I lost 3R. So again, bad luck, right? But at the same time, you can see that in the month of September, I had certain trades. For example, I had a trade on IRDM. Instead of getting my usual 2R, I got 4.5R for that one trade. Okay, so that was good luck. So my point is that in trading, in a small sample of trades, sometimes you can have good luck and get more than 2R. You can get 4 or 5R when the stock gaps up or moves up really fast. But sometimes you may have bad luck where you get minus 3R instead of minus 1R. But in the long run, the good luck and bad luck evens off, right? They cancel each other out. So that in the long run, trading profitability and success has got nothing to do with luck. It's got to do with following the rules and again, ensuring that your average wins are more than your average loss, right? And let the statistics play out by itself. Now, some people who send me emails and say, Adam, because of this happening, isn't it better that I do not put a stop loss, right? Because putting a stop loss doesn't always work, right? That's like telling me, hey, Adam, when I drive, I should not have airbags. I should not have a seatbelt because they don't always work, right? That's stupid. Doesn't make sense, okay? Remember, in driving, you have got airbags, you've got a seatbelt. So in a normal accident, you don't really get hurt, okay? But sure, in a bad accident, sometimes could an airbag give you a bruise on the face, right? Could a seatbelt choke you and you get a bruise? Sure. But that doesn't mean you don't wear a seatbelt, right? So 99% of the time, the seatbelt will save you and you get stopped out at minus 1R. In fact, I can tell you, I've been trading for 25 years and this minus 3R loss has only happened to me probably only twice in 25 years, and it happened to be last month, right? It is very rare to get a minus 3R loss, very rare. Yeah, I do get minus 2R loss sometimes, but 90% of the time, 95% of the time, you get a minus 1R loss. So stick to the stop loss rules and you'll be okay. And again, in a short run, you will have trades where you get more than 2R, you get 4.5R, and again, that evens out those lousy trades, the bad trades at the end of the day. Okay. The other thing that I show my students when you take my online professional trading course is a simulation that works like that so that you have the right expectations in trading. Okay. So in this simulator, you can see that if you've got a win rate of 55%, or I say in trading, a realistic win rate is 50 to 60% win rate. Now, this is different from investing. If you invest in a good business and hold it for 5 to 10 years, your win rate should be 80 to 90%. Because in a long run, good companies always go up in price. But in a short term, in a couple of days, your win rate is not going to be 80 to 90%. It's not realistic. It's 50 to 60%. Okay. So if you got a win rate of 55%, for example, and you are winning 2R on your winning trades and losing 1R on your losing trades, and you risk 2%, you can see that you get about 234% return on capital over 100 trades, as you can see, okay? Now, I take an average of anywhere from 10 to 20 trades a month, okay? So in other words, I finish about 100 trades in about 5 to 6 months. And in 1 year, I do about 200 or more trades. So in other words, if you just have a 55% win rate with a 1:2 risk to return ratio, you're getting, easily a 3 to 400% return on capital a year. Okay. Now, when I show this to people, everyone says, Adam, I love this, right? I'm going to do this. I'm going to follow your trading system, right? Everyone says that. But the reality is very few people can actually achieve that. Because 60% of your success as a trader is not the trading system. It's not the mathematics. It's not the statistics. It's your psychology. See, the trouble is many people, they say, Adam, I want to get a 234% return in 5 months. I want that. But to do that, guess what? Take a look. You must be willing to go through the process of getting these wins and losses like I'm showing you here. Okay, and you can see that in a system that is a 200% return, which is basically what I get in a year. Okay, you will have periods where you get, for example, let me show you over here, where you get, look at that, right? 1, 2, 3, 5 losses in a row. Okay, 4 losses in a row. So can you imagine when you start trading, for example, like you look at September was a negative expectancy month, right? So imagine you take 1, 2, 3, 4, 5, 6, 7, 8. Imagine you take 10 trades and you lose 9 and you win 1, right? You've got a win rate of 10%. Most people will give up. They say it doesn't work, it's crap. I'm not going to trade stocks, I'm going to trade forex. And when I trade forex, the same thing happens. They say I'll go trade options. Options, I'll go trade cryptocurrencies, right? So most traders never succeed because they go around in circles searching for the holy grail, right? A trading system that wins every month, every day, 90% every month. It doesn't exist. There's no such thing. Okay, so they keep changing their strategy. They jump from system to system, and they always lose money. Okay, so remember that in any winning system, you're going to have a series of losing trades or a negative month at times. Okay, we don't like that, but it's a reality, right? But at the same time, guess what? We're also going to have periods like this, right? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, where you have got 10 trades, 7 winners and 3 losers, 70% win rate. And that's what happened in October, okay? So the lesson is to think statistically over 100 trades. So as a trader, I always say that when I always think the result I'm going to get in 100 trades, I know I'm definitely going to make money. I know I'm going to make profits. It's a guarantee, okay? But for 5 trades, 10 trades, I've got no idea are they going to be winners or losers. All right, so to answer that question, when people ask me, Adam, so what did you do differently in October to get a different result from September? And the answer is, I didn't do anything different. I did the exact same thing. I used the same exact strategy. I took the exact same high probability trades. And that's what traders have to understand. You can do the exact same thing, but get a very different result in a different month. Why? It's got nothing to do with you. It's got to do with statistics and probability. Or some people may say, maybe the market has changed. Maybe because of the Federal Reserve. Maybe because of this. People find all kinds of reasons why they got a different result. And they say, this month I got a great result. Why? This month I got a bad result. Why? Right? And you're asking the wrong question. So the key to successful trading is not to focus on the outcome of the trades. Because in a short term, you cannot control the outcome. The outcome is random. It's like tossing a coin and saying, why did I get a heads? That's a stupid question. Why did I get a tails? There's no reason, it's random. Okay? So what you're going to focus on is to focus on the process of taking good quality trades, of taking high probability trades. Because if you do that, for sure, guarantee in a large sample of 50 to 100 trades, you always make money. Okay? But in a small sample, I repeat, you've got no idea what you're going to get. It's kind of like a box of chocolates. You have got no idea what you're going to get. All right? So focus on the process, not the outcome. So let me summarize it in a few key lessons for you right now. So let me summarize the key lessons once again on trading psychology. And this really applies in the month of September. So the first thing is to think statistically or think in terms of probabilities, just like the way a casino thinks, right? A winning strategy will have wins as well as losses. The losses can come in a row. As you could see from a simulator, you can get 5 to 10 losses in a row sometimes. So do not be greedy when you win. At the same time, don't be fearful when you lose. Every trade outcome is statistically insignificant and random. A good trade can end up as a loss, and a good trade can end up as a win. So focus on following the rules and not on the outcome of each trade, which you can't control. As long as you know you've got an edge, where your trading system gives you a 50% or more win rate and your average win is more than your average loss, you will always be profitable over many trades. In fact, I always tell my traders that it is impossible to lose money. I repeat, it's impossible to lose money unless you give up, unless you stop trading. But if you keep trading, it is impossible to lose money. You will always make money because of the trading system's edge. The next thing is, in order to succeed in trading, you've got to be confident. You have to be absolutely confident. Now, when I talk about confidence, I'm not saying being confident in a specific trade, because when you place a trade and you say, this trade is going to be a winner, I'm confident that this trade is going to win, that is dangerous, because if it doesn't win, you're going to lose your confidence. You're going to be disappointed, angry, and frustrated. And that's what happens to most traders. So the confidence doesn't come in one trade, but the confidence comes in knowing that your trading plan, your trading strategy has a positive statistical expectancy. Okay? Now, understand what is the difference between good trades and bad trades, winning trades and losing trades. A good trade is one where you follow the rules of your system exactly. And again, a good trade could be a winning trade, a good trade could be a losing trade. If you just keep focusing on executing good trades, in the long run, you will always have success and your profits will be repeatable. Okay? Now, if you take a bad trade, in other words, you didn't follow the rules, you just bought based on a rumor, or you shifted your stop loss, you broke the rules, and if you made money, that's a bad trade that won, right? In the short run, it makes you happy. You feel good, right? In the long run, it destroys you because it will reinforce certain bad habits, and you continue to have those bad habits in the long run. Your trading system will not have a positive statistical expectancy. So focus on having good trades. The next lesson is this: the overall outcome of your trading journey will not unfold linearly. In other words, from $10,000 to 100 grand, it will not go up in a straight line. Okay, your account can't go up every day, every month, all the time. We love it to be, doesn't happen that way, right? So do not look at the trading outcomes in a certain period and then extrapolate them into the future. So some people, what happens is that when they go through a winning streak and they win, for example, from here they go through all these wins, they think, hey, if this continues, I'm going to be a millionaire the next day. And they get unrealistic, right? At the same time, if you get a losing streak and you say, if I continue like that, I'm going to lose everything, that doesn't work as well, right? So don't think linearly, think in a cyclical fashion, okay? We should neither be discouraged by losing streaks or be carried away by winning streaks. Like in September was a huge winning streak. Don't be carried away and say, okay, I'm going to bet more, right? In the long run, losing and winning streaks will even out each other. The long run distribution of wins and losses will make us profitable. And the long run performance has very little to do with the luck factor. Always remember that. Okay. So with that, let's look at the specific trades in September and why I took those trades. All right, so let's take a look at the trade alerts from 1st of October. And the first one was EGP. This was a trade that was cancelled for not being triggered. And this was a September trade, so I'm going to ignore that. Let's go to the first trade of October, which was BAX, right? You can see BAX was not triggered as well, but let me just show you BAX. So BAX was here. This was a bounce trade. And this was the 1st of October, so let me just scroll back. Okay, great. So over here you can see that the price is bouncing off the 50 moving average, right? So it's going to take a buy when it had a 2-candle reversal pattern with a confirmation candle. So it's going to buy the next day at the price of 62.82. So that was our entry price with a limit of 62.87. Okay, now what happened? Basically, this trade did not trigger. Let me just show you. The next day, it was cancelled. Where was it? There we go. Right. So this the stock gapped up above the entry price, so it was no longer a low risk trade, so we cancelled the trade. Okay. So take note, the limit price is 62.87, which means we will not buy above 62.87. And what happened was the next day, the price gapped up, right? You can see on this day, let me click on this. If you look at the box on the left, you can see that the low was 62.90. Can you see? The low was 62.90. Open 62.92, low 62.90. So it never went to 62.87, right? So it gapped up. We didn't get filled, and so it was not a triggered trade. So the next day, as you can see, we canceled the trade. So this was not a trade that we went into because of that. Okay. Next was that was STLD. This was a September trade, which we shifted a stop loss and we got stopped out at a very good profit. Okay. Next was TROX. So this, let me key that in, TROX. Okay, so this trade was entered on the 2nd of October. The trade alert went out before the market opened. So again, you can see that this is a bounce trade bouncing off the 50 moving average. And the buy order was at 2162, right, which is this black line. I've just drawn 2162 is a buy order with a limit of 2165, okay, which means we do not buy if the price doesn't go below 2165. Stop loss at 2031, okay, so somewhere around there. And the next day, what happened? Right, there we go. So the price opened here and went up, and we got filled on the order, and our target price was 24.24, and there we go. Right, so this is our target price, 24.24, yeah, 24.24. So target price is somewhere here, and within 3 days we hit our target price and we exited the trade with a 2-hour profit. Right, so this was our first winning trade of the month. It looked good at the time, but you know, we had some losses after that. Right. Okay, next, 4th of October we had MGM, and this was trading the range. Let me just put MGM. So this was a range trade. Let's change that. Okay, so the price looked like it was in a range, going up and down, up and down, up and down. So I saw this bullish pin and say, hey, let's buy the next day if the price goes above the bullish pin. So the entry price was 30.96, stop loss 30.01. So there we go, 30.96, 30.01. The next day the price went up, triggered our entry price, okay, but it was a losing trade. As you can see, went up and boom, hit our stop loss, and we were out with a -1 hour loss for that one. Okay, this was TROX. We shifted our stop loss to entry price once the price moved 1 hour in our favor and we hit our target price. 5th October there were no trades. Okay, no trades on the 6th of October as well. 9th of October we had a Bollinger Mean Reversion trade, SRE. Let's take a look at SRE. And notice that I use different strategies, and for different strategies I've got different chart settings that work for that specific strategy. So this is a Bollinger Mean Reversion, also known as counter trend trading strategy, right? So the price goes down and you can see the bullish pin that's oversold. We're looking for a bounce. So my buy order was at 112.08, which was here, 112.08. There we go. That's my buy order. The next day, if it goes to 112.08, you get triggered. Next stop loss at 109.9. So 109.9. I can't, yeah, 109.9. Can't get it exactly there, so I'll just leave it there. So what happened? So for this trade, you can see give me a second. Let me just double check on that. That's right, SRE was that. Okay, so SRE was triggered the next day. So went up, triggered the trade, and hit our profit target over here at 116.44. That's right. So 116.44, somewhere here. Just hit our target profit very nicely. Came down and hit it over here again. All right, so that was a second winning trade on SRE, which was a Bollinger Mean Reversion. Okay, the next one was HELE, trade the range. So another range trade, HELE. As you can see, it's a range, and the entry was here. So the price sold off, and we had this candle, which is a doji candle, and my entry price was 89.50 above the high of this candle, stop loss below the low 86.22, and profit target was 96.70, which was somewhere there, right? So enter there, profit target there, stop loss over here, and the next day it went up, triggered the entry price, went up, and what happened was the moment I saw this bearish candle, okay, I moved the stop loss to there. So the next day I got stopped out and I did not hit the profit target, but I made a pretty good profit from here to here. Okay, so the profit was on Healy 1.62R. So I didn't get the usual 2R. I got 1.62 because when I saw this bearish candle, I decided to move my stop loss to protect my profits. All right, but it went up to the profit target actually. So if I left it, I would have gotten 2R. But that's hindsight, so you never know, right? Okay, next one was, let's see. REGL, okay? Now, this was a trade that was not triggered, so you don't see it here, but let me just explain. This was a sell trade. This was a short trade. Again, it says, usually I only go short when the S&P is below the 20 EMA. In this case, the S&P was above the 20 EMA. I decided to go short because I had a lot of long positions, but it didn't get triggered, which was a good thing, actually. So REGL, there you go. So it was in a range, as you can see. Resistance, resistance, resistance. It hit resistance, and I saw this bearish candle. I said, okay, I'll put a sell order at 52.48, which is 52.42 actually. 52.42. No, I can't get it exactly there, so I'm just going to leave it at 52.40. Yeah, 52.42. Can't get it exactly there, but okay, sorry, it's 52.48. All right, 52.48. Brain's not working today. 52.48, there we go. So that's my sell order, and my stop loss was 53.09, which was 53.09, somewhere there, all right? So what happened was the next day, the price did not go down to trigger my order, all right? In fact, it kept going up. So as you can see, I canceled the order. There we go. So cancel REGL. So there was a cancel order, didn't take that trade in the end. Okay. Now the next one was 11 October DG. So this was a breakout from consolidation trade. Let me see, where was my exact entry for this one? Oh yeah, okay, got it. All right, so you can see this was a consolidation. All right, test 1, test 2, test 3, test 4. It does a breakout. Okay. You can see this was the resistance. Resistance, resistance, resistance became support. Okay. So over here, the price broke out of consolidation, found support and bounced up. So I put a buy order at the high of this candle, 81.27, and stop loss at 77.87. Okay, so the next day it got triggered and it went up. Okay, so this was DG. Okay. Now, this was a trade where I lost 3R, MGLM. Let me just show you the trade, MGLN, and let's see what happened. Again, there's no way you could have anticipated it. That's live, or rather that's trading. And live as well, all right? That's live as well. Can't anticipate everything that happens in life. All right, okay. So this looks like a very nice trade. In fact, sometimes the nicest trade that screw you up, okay? You can see it's bouncing off the 18 moving average, bouncing very nicely. Let me just remove this, okay? So it bounced off the moving average, okay, and it had a confirmation candle. So I put a buy order at 85.95, stop loss 84.20, okay? And what happened? Right, that's what happened, right? So the next day it got triggered, it went up, looked good, and boom, it went down really fast, very fast, so fast that it did not sell at the intended stop loss of 34 or of 84.20. It sold somewhere over here. So again, instead of getting 1 hour loss, I got 3 hour loss, right, because of this. And again, when that happens, there's no point asking why did this happen, why am I so unlucky? Move on with your life, right? It's part of the game. Move on. So that was the minus 3 hour loss. Okay. The next one was CBS. Let's look at CBS. And this was a Bollinger Mean Reversion trade. And there we go. So the price is getting oversold. We've got a bullish pin. So I had an entry at 57.44 and stop loss at 56.31, right? Now what happened the next day? The next day the price didn't go, right? The price did not go to my entry, did not go up as I intended, went down. So it is an invalid trade, right? So if it's not triggered on that day, I cancel the trade. So you can see CBS the next day was cancelled. Where was it? There we go. Okay, so CBS was a cancelled trade. Now the next trade was HA. Again, this was a bounce trade. I'm not going to talk too much about it because again, it was a cancelled trade. It didn't get triggered. So there we go. As anticipated, the price went down too fast, gap down. Trade was not triggered, so it's cancelled. So never went into that trade. Okay, the next one was FRAN. And this was a trade that was entered, was another one that did not work out as we wanted. There we go. Right, so you can see price having a bullish pin, oversold at the Bollinger Bands, buy 691, stop loss 656, trade was triggered, and boom, right, stop loss was hit in a few days. Okay, so this was another trade that was stopped out. This was shifting my stop loss on IYR, an earlier trade, shifting stop loss on SRE, shifting stop loss on HELE. All right. Remember that when I enter a trade, when the price moves 1 hour in my favor, I shift my stop loss to the entry price to protect myself, so I will stop out at break even at the worst case scenario. Okay. Next trade was Jazz. So again, this was a trade that didn't work out. I entered this trade twice actually. Okay, so the first time was a bullish pin over here. That was my entry price, my stop loss, and boom, it got triggered and stopped out in 2 days. Okay, so that was what happened. Now I entered the trade again. When I saw another bullish pin, I said, okay, fine, let's enter again there. My stop loss was here. okay, and it got triggered and it went up by 1 hour. As you can see, the price went up by 1 hour and hit the moving average. I shifted my stop loss to entry and hit my stop loss and I broke even. So I entered twice. The first time I got a minus 1 hour, second time was break even. Okay. Now the next one was a winning trade, was EVHC. This was a capitulation trade, EVHC. And again, this was a very nice trade. Take a look. There. So this was a bullish pin with a confirmation. So there's a capitulation trade. Entry was there, buy 41.75, stop loss about 39.60. Profit target at 46 or 45.97. Profit target 45.97, somewhere there. Okay, so you can see the next day the trade got triggered, went down, boom, boom. Okay, so 1, 2, 3, 4 days it hit the profit target. That was another winning trade of 2R. Okay, now this was my second jazz entry, which I talked about earlier. I entered again, went up to 1R, shifted my stop loss, broke even. Okay. Okay, so the next trade was ENDP. This was one that didn't get triggered again, so I'm not going to really spend much time on it. You can see the next day, trade was not triggered, so cancelled. All right, so ENDP was not a trade that got activated. Next was MGM. Now, after I entered MGM, I got stopped out. I re-entered it again. So let me show you at 30.57. So MGM was re-entered. So this was a bit frustrating. And I'll tell you why. Okay, so MGM, I re-entered again on the 18th of October after I got stopped out, right? So 18th of October, where are we? Let's take a look. So recall that I entered here initially and I got stopped out. So when it came back, I said, okay, let me re-enter it. So I re-entered it at 30.57, which was where? 30.57, which was here. And my new stop loss was at 29.48, somewhere here, okay? So what happened was the next day, it went up. I got triggered on the trade. And it went up to here. Now, what was happening was that earnings, company was going to announce earnings in a few days. So I thought, okay, I'm not going to take too much risk on this one. So the moment it went up here, okay, I decided to shift my stop loss to entry price, to break even, just in case it comes down. It came down here, hit my entry price, so I stopped out at break even. So the second trade was a break even trade, as you can see. But the company announced good earnings and you went all the way up. Okay. Now these are instances where you exit the trade and then it goes in your favor, right? And you must have no regrets in these situations, because if you had followed the rules, then there's no regrets. Of course, if you broke the rules, then there's a regret. Now, in a way, I followed the rules because I exited before earnings was announced, and I was a bit more cautious, so that was fine. So no regrets, even though it went up, I could have been a winning trade, but turned out to be a break-even trade. But when you follow the rules, that's just what happens, right? So have no regrets and move on when it happens. Next one was ANSS. Now this was one where, again, I kind of broke the rule on this one, so I regret a bit, because it was a short trade. And again, I don't usually take short trades when the market is bullish, but I thought, hey, I've got so many long trades, let me take one short trade to hedge against, right? So it says here, right, the market is bullish, but I'm taking a potential short to hedge several long positions, and well, turned out to be a losing trade because the market was too strong and it just went up. So this was a range trade. As you can see, it was going, so resistance. I saw it coming down. I did a sell over here with a stop loss over there. I thought it would come back down, but boom, it blasted all the way up. So stopped out at -1 hour again, okay, for that one. Okay, let me talk about my last 3 trades, which was net, NAT, XON. So these two were losing trades. They were very similar. Like this was NAT. So this month was just not very positive for these counter trend trades. Okay, there'll be certain months when these counter trend trades work really well, and some months they don't work well, and there's no way to tell when it's going to work, when it's not going to work. Right? It's like when you toss a coin, you've got no idea when it's going to be a tail or a head. So you just got to keep tossing, and just know that there's going to be more heads and more tails over time. Okay, so you can see that this was a bullish pin. I entered after the confirmation candle, bought at 463, stop loss at 436, went up, boom, hit my stop loss, out. Okay, and Exxon was very similar as well. Okay, the last trade was Inva, and I'm still in the trade. So this was another range trade. Let's take a look. Range. Okay, so you can see a clear range over there. Okay, so 1, 2, and I bought it somewhere here. Okay, so I bought at 12.10, 11.45 my stop loss, and right now we are at 12.41. So slightly profitable. All right, still in this trade, and this is the only trade I've not closed for October. All right. Okay, so that summarizes the month of October. Again, ending with minus 2.29 R, risking 2%, so that's 4% down for October. Okay, no worries, because like I said, I got a 36% return for September. Okay, can't get every month positive. I'd love to have that, but there'll be negative months. But I always know that at the end of the quarter, at the end of the year, I will always make a lot of money. All right, so again, to be a successful trader, you got to have confidence in your trading system, and you always think of the next 50 to 100 trades and not the next 5 or 10 trades. All right, so this is Adam Khoo, and I'll see you soon. Alright, so if you like the video, you can subscribe for more videos at my channel on YouTube. If you'd like to take up my online professional forex or stock trading course, you can go to piranhaprofits.com. If you'd like to attend our live Wealth Academy programs in Asia, visit wealthacademyglobal.com. This is Adam Khoo, and I'll see you soon.